2 years ago, I finally quit my 9-to-5 job for good. Since then, I traded full-time, cashed out over $100,000 in payout, and I did it without the secret 99% win rate strategy. The secret is understanding that 95% of traders play the game completely. And I promise by the end of this video, you will see the market through a completely different lens. The lens of the profitable 5%. To do that, I'm going to give you the master. First, we'll identify the 7 toxic habits you need to eliminate from your trading immediately. After that, I'll introduce you to the framework that all of my success is built, the trader pyramid. No time to waste, let's get into the video.
Learning is two things. It's both focusing on what to avoid and stop doing that, but it's also on focusing on what works and double down on that. So first, in this teaching, we're going over the 7 traits of losing traders. So what do we need to avoid to become successful? After that, we'll go over the exact framework I use to become profitable, the trader pyramid, what to actually do. Before we start, quick disclaimer. 95% of traders lose money. That means 95% of the trading behavior, which you will see on YouTube or anywhere else, will not work in trading. So think about that. If you want to become the 5% of trading, you need to do what the other 95% is not doing. That's what we're going to teach you. We're going to focus on the 5%, like me, who makes money, and you very soon, I promise you. We're going to focus on what to do to be profitable and actually make money with trading. But remember, trading is the hardest way to the easiest money. The hardest part of this, we're going to tackle in this market mastery course. The easiest part to the easy money is you making money based on the frameworks you're about to learn. You should at least expect to spend 6 to 12 months on building your foundation with the expectation of not making money and even losing money. And if this scares you, by all means, stop watching the video right now, go dropshipping, go affiliate marketing, and any other way to make money online. Trading is not for you. If you're still convinced you're going to make it with trading, amazing. Let's get to work. Before we start, do you have your notepad? There's no Netflix. Take out your notepad and let's get to work. There we go. First, let's start on the 7 traits of unsuccessful traders. So what to avoid. First one is human emotions. We're going over them one by one. Human emotions, your trading psychology, lack of discipline, lack of money, unrealistic expectations, a lack of strategy or an edge, lack of risk management, or that limited belief that trading is hard, I can never make it, the barrier of entry. The first one is human emotions, the trading psychology. And to understand human emotions and psychology, you need to understand what's going on here in your brain. So if you do a quick Google search, how does your brain works, you find this picture. And you have basically 3 layers in your brain. The first one is your reptile brain. It's your instinct, your fight or flight system. On top of that, you have your limbic system. There's your emotions. And on top of that, you have your neocortex. It's your speech, your logic, your higher thinking. Trading triggers automatically, you cannot do anything about this. Triggers your reptile brain, your fight or flight instinct. Oh no, I need to get out of this. I need to do this. You're gonna go on crazy. This also triggers your limbic system, your emotions. While your trading decisions should be made at the neocortex level, the logical, higher thinking. With trading, you will encounter a battle between these layers in your brain. The losing 95% is stuck in their reptile brain or the limbic system. They just cannot get out of that fight or flight or that emotional state. The winning 5%, where I want you to focus on, spends the majority of their focus in the neocortex. And there are tricks for this. We're going to talk about that later in this course. The second one is the lack of discipline. You need to be focused on intentional improvement. Discipline is a muscle. Maybe you are now saying to yourself, I'm not a disciplined person. No, you're not, because you need to train that. Discipline should be trained consistently every single day. Focus on intentional improvement, go somewhere and not anywhere. And this is a brain tattoo I want you to remember. All change is hard at first, messy in the middle, and gorgeous at the end. What I mean by that is when you're going to do something new. Can be trading, can be going to the gym, can be running, can be whatever new. It's going to be very hard at first. Your brain is going to find 100 excuses to not do it. It's hard, you should go away from that. Your fight or flight instinct comes above. Then your limbic system says to you, no, don't do that. When you overcome that, of course, that's also where your growth is. Then comes the second part, the middle. It's going to be messy. You're all over the place. You know that you're on the right track, but it's still so messy. You're on the right track, but you don't know when you're going to get there, how you're going to get there, to that change state you want to go. But then when you overcome that messy in the middle, it's gorgeous at the end. In trading, the first and the middle, especially the middle, is what most traders made them quit or lose all their money. But remember, there is something gorgeous at the end. And that's very simple. What's gorgeous at the end is you making money in trading. You making money in trading to, I don't know, get your family on a nice holiday, or quit your 9 to 5, or live on your own terms. Go to, I don't know, the other side of the world because you want to visit the country. There needs to be freedom in your trading, and freedom is different for everybody, but it's gorgeous. Remember this, all change is going to be hard at first, messy in the middle, and gorgeous at the end. And here you see that intentional improvement graph. It's compounding. So here is the baseline. On the vertical line of results, horizontal line is time. If you focus on that intentional improvement, go somewhere, not anywhere, you will see at the start, nothing happening. But over time, the difference between you making a 1% improvement over time instead of a 1% decline over time is going to be massive. So that means also a death by 1,000 cuts. So maybe you're not aware if you take that cookie or you remove the stop loss one time that you're actually chose today to decline 1%. But what if you do that 100 days in a row? You're fucking fat after 100 days and you're going to lose all your money when you're going to remove your stop loss after 100 days. I guarantee you. So be aware that 1%, those tiny little details are going to make a huge difference. But it's also about building self-respect. Let's go a little bit deeper. Discipline should be a focus on the charts and outside the charts. You will gain self-respect when you are doing things where you don't feel like doing them. You did not want to go to the gym, but you did. You did not want to eat healthy, but you did. You did not want to save money to invest in yourself, but you did. You did not want to sit on your hands and be patient for your next trade setup, but you did. And every single time you follow your disciplined self, the choice you make that will give you a better outcome, that 1% improvement in the long run, you will improve your self-respect. It's cool, right? But there's a flip side to this. Every time you do not follow your disciplined self, remember the death by 1,000 cuts, eating a pizza, going to the party you should not go to, buy that random shit you see on TikTok, I know you guys do this, you decrease your self-respect. And this compounds. Remember this graph, the compounding to the up and the downside? It's all about your self-respect. After, let's say, 50 days, 100 days of you actually focusing on that 1% over time, your self-respect goes to the roof. Like, yo, I'm not that guy anymore. I'm not that girl anymore who eats that pizza. I'm going for a run. Fuck those losers. I'm better than this. Focus on that self-respect. And this is the compound effect in action. Compound effect is choices plus behavior plus habits plus time. And it can be income, it can be health, it can be relationships, it can be happiness, it can be success. It's all the same formula for the different important areas in your life. So if your choices, behaviors, and habits align with a successful person, this one, you should be good. But keep in mind, the death by 1,000 cuts. So in this graph, you have three persons. The person here in the middle, just their choices are the same, their behavior is the same, their habits are the same. They just don't change anything. So over time, they will be exactly in the same place. The one on the bottom here, his choices were declining. He chose for the minus 1%. He didn't go to the gym anymore. He over-leveraged in trading. He stopped watching educational videos. He stopped reading books. He stopped giving attention to his family, to his friends. And over time, the first maybe few weeks, few months, they're all the same. But over time, there is a point where it's going to start to compound. For example, he doesn't have any income anymore, maybe less. His health is declining because he's gonna be fat because he stopped working out and he eats unhealthy. Maybe his wife is going to leave him because he doesn't give attention to it and his kids are abandoned. Because of that, his happiness goes straight down. He's not successful at all. Of course, there's a flip side to this. This legend here at the top who chose the other side, the 1% better. He chose to go to the gym, to buy that course, to be the disciplined person, to give his family all the love and attention he has. And those three guys, first few months, first few weeks, are all the same. But this compounds over time. Remember that acronym like, oh, this is an overnight success? This is the overnight success, but also your overnight failure. 2 times. It looks all the same, but all of a sudden, when you focus on the 1% over time, you are ahead. You are the overnight success. So go focus on that. Remember that brain tattoo? All change is going to be hard at first, messy in the middle, and gorgeous at the end. Be very sharp on mistakes. Remember that 1% decline? It's okay to make them. Don't get me wrong. In trading, life in general, but you're here for trading, you're gonna make so many mistakes. And it's okay. It's completely fine to make them. But it's not okay to keep repeating them. And here's insights on intelligence and learning. I learned from Alex Hormozy. When you make a mistake and you get feedback on that mistake, you should change your behavior to make the mistake again. You should change your behavior to avoid making that mistake again. But if you make a mistake and you don't change your behavior, you do not learn anything. You just be a donkey who makes the same mistake all over again. Let's say, example, you remove your stop loss. That's a huge mistake. I'm going to talk about it in a second. And your feedback is your account is blown because you took a massive loss. Well, okay, that's a mistake. It's okay. It's one time. But if you do not change your behavior, the next time you're feeling emotional, you do exactly the same, you don't learn anything. You just make exactly the same mistake again. And the only way to improve is by learning, is by changing your behavior based on the feedback you receive. And your intelligence is measured by how fast you learn. In other words, the speed you change your behavior based on feedback you receive. The faster you implement feedback loops, the more you learn, the more intelligent you are. So let's now agree with each other. We're going to be focusing on being an intelligent trader. So that means you make a mistake, the time between you making the mistake, change your behavior based on the feedback you receive, and then not making the mistake again should be as little as possible. And maybe at the start, you will make mistakes multiple times. But again, you focus on 1% every day. So that means if you made a mistake and your feedback loop takes so long, and maybe you make the mistake multiple times, if you make the mistake, the next time you make a mistake, it should be a faster, a shorter feedback loop. Be that intelligent trader. You can do it. I promise you. The third one is the lack of money. Most people starting out with trading think they cannot go to that 100,000 or more goal because they only have a few $100s to start with. Well, this cannot be further from the truth. I'm going to explain you why. You can go to 100K if that's your goal. It can also be more, can be less, whatever. Let's take it 100K. You can do it in two ways. Without leverage, leverage is compounding your account. Another brain tattoo. I'm going to shoot your brain tattoos today, guys. Small steps done consistently over time yield stunning results. And with compounding your small account, it can be very significant. Let's say you want a daily gain of 1.5%, 15 pips stop loss, your starting balance is at 1,000. This is how your trading account is going to be compounding after, let's say, 20 or 30 days. Of course, losing is not taken into account here, but this is an average to show the example of compounding. So you start with 1,000, and after 20 days, you went from 1,000 to 1,300. Well, that's not exciting, right? I wouldn't go trade if I would know, okay, well, I'm going to take 20 winning trades in a row and I only make 300. I wouldn't do that. But the power is in the compounding. Let's take a look at the second image. After 200 days, your 1,000 is 35K and you're making 500 per month, 500 per day. That's something I'm more interested in. But before you can reach that compounding stage, and again, you can lose in between. So maybe this road will take a little bit longer, but you should know about the power of compounding. So the first 30, 60, 90 days are so boring. You build data, you just do what you need to do, you improve small numbers, you're just building data on your trading and on yourself. But after that, I think most of you will accept a $500 a day win every single day or multiple times a week. So let's say if you can make 3 trades of $500, $1,500 per week, I think most of you will be happy with like a $4,500 extra income on the side from trading. And here you see that graph of compounding. Small steps, seemingly insignificant, done consistently over time, yield stunning results. And then let's talk about with leverage. And then you can use prop firms. A prop firm is a company that provides traders with access to capital. In return, the traders share a percentage of the profits they generate with the company. Prop firms can help skilled individuals propel their trading careers by finding capital, training, and general support. In other words, if you have read the Rich Dad Poor Dad books, it's traded with OPM, other people's money. And leverage is an investment strategy of using borrowed money, other people's money, specifically to use various financial instruments or borrowed capital to increase the potential return on investment. I like leverage more than compounding because I get more money for my unit time invested in my trading. And Here's a little schematic on why to use a prop firm. This is the red arrow is a personal account, so the compounding we discussed with the without leverage part. What is the chance of you flipping $500 to 100k? It's not that high. You can do it, but it takes so long. You saw like you needed at least like 200 winning days or something. It is possible, but it takes a long time. And of course, the mental game of flipping that, because you have losses in between as well, is difficult. That's why I like leverage, prop firms. Because with that same $500, you can get a 100k challenge on most prop firms. A challenge is where you need to prove to a prop firm that you can trade. You have some goals like 10% or 8% profit goal, maybe 2 phases. When you pass the challenge, you can actually trade on a prop firm. If you pass the challenge and you make 1 or 3% per month, that's an extra 1 or 3k per month consistently. But you can even go further than this. Even when you pass, let's say 1 out of 5 challenge, because the challenges are hard. The challenges are made for you to lose because that's how prop firms make money. Let's say, hypothetical account. You buy 5 challenges of $500. That costs you $2,500. Of that 5 accounts, you only pass 1. You make a 3% payout. That's of course a 1 to 3 on a 1% risk per trade. Then you have a payout of 3,000. Of course, prop firms take their profit split, but let's hypothetical, you have the 100%. Your profit on the batch of 5 challenges, 5, is 3,000 of your payout minus the 2,500 from your initial investment. The buying of the 5 challenges is 500. So now you are in profit, and you still have that 100k account to play with for next payout, the next payout. And now you have some extra side cash to buy new challenges and new challenges. And that's how you, of course, scale a prop firm empire. And even if you have, say a 3,000 payout, but a 80% profit split, so that's a 2,400 payout. Then after the first payout, you already almost at break even. You're the minus 100. That's a good deal, because then you still have that 100k account to play with. So traders who come to me who say, I don't have any money, I cannot start, I only have a few hundred to play with, there's no excuse. Or go compounding, or go play prop firm. I don't care which one you choose. If you do it consistently, just do it. The fourth one. And before we continue, I want to congratulate you to be still in here. Don't forget to take notes. Take notes, ask questions if you have them. In the school group, just make a post, question, and you should be good. And because I want to congratulate you, we do a little confetti here. Let's go to the fourth one. Unrealistic expectations. Is it easy money, trading? We discussed this earlier. Trading is the hardest way to the easiest money. You should not be here for the easy and quick money. Yes, you can make some money at the start, but the big money, the 100k plus, is not going to happen in the first week. This also requires an incredible amount of determination, hard work, and be able to change the way you approach your life. You need to change your whole brain. Remember that compounding, that's not only in the charts, it's also outside the charts. If you're here for the easy and fast money, I said it before, I would recommend just stop. It's okay. You're just not going to join the Profitable Trader Club. I don't care. Go on YouTube, find your next dropshipping course. There are some very amazing ones, but trading is not going to be for you. Trading is hard work, the hardest way to the easiest money. If you survive the hardest path, if you're serious about this and actually want to give yourself a shot on making this in this amazing industry, give yourself at least 6 months. And I think I want to give a very big disclaimer here. Not 6 months of messing around. 6 months of focused, intentional grinding. Not like, oh, I bought a few challenges and I blew a few and I don't journal and I just take some trades here and there and I complain to everybody that trading is hard. No, it's focused, intentional improvement. Remember about the rate of learning? So you take a trade, you make a mistake, you're going to make multiple mistakes a week, maybe multiple mistakes a day. Make the feedback loop between you making a mistake and actually learning about it as quick as possible. Intentional improvement. Little life hack here. And it's also for trading, but in general, you cannot fail if you don't quit. So maybe for you, it's 6 months. Maybe for another person, it's 12 months. Oh yeah, I helped traders who were trading for 4 years. And they were doing like lots of work in it. But without intentional improvement, you can get 4, 5, 6 years in without making any money. There needs to be some intentional improvement. If you combine that never quit mentality with intentional improvement, I'm 100% confident that you're going to make it in trading. And why I'm 100% confident? It's what I did. I am my own proof. intentional improvement. I also had some months where I said I was trading, but I was not focused. Only when a mentor told me the frameworks I needed to know, and the ones I'm teaching you here and also in the other teachings, that's where things start to click, the intentional improvement. Most people say, I'm trading for 4 years, but if you actually ask them, okay, give me 4 years of your journal, or give me proof of 4 years of you actually sacrificing everything you had to become successful in trading, they don't have that. So, and if it is you, all good, change. 5, lack of strategy of edge. Trading is a business. The difference between the 95 losing and the winning 5% is very, very easy. The winners approach trading as a business, not as a cool side hustle, it's a business. That means revenue, expenses, and data. Your trading business, just like a regular business, needs data to perform. Why do you think data engineers and data scientists are the most in-demand job right now for big corporates? Because it's needed. So maybe start building data now, today. You have 2 choices right now. First one is the random approach. Spend 6 months taking random trades, hoping for the best, making mistakes, continue losing money due to your lack of data. Fine, it's a random approach. Of course, as scholars, so of course you're gonna know where I'm going to hint at right now. It's the second choice. Data and trust, so confidence building approach. Spend 6 months with a focused approach. So deposit between $100 or $1,000 in a broker, whatever you want to play with, in a broker account, and get to know every single data point of your routine, your execution, and journal everything. And yes, with the second approach, of course, we talked about it before. $100 or $1,000 is not the big money you hope to get when you start trading. But that comes after that. Remember, hard at first, messy in the middle, gorgeous at the end. With the second approach, you can still make some nice extra income on the side, but the main focus here is data collection. And what do I mean by that? Everyone wants to achieve that 10K a month you see on when you scroll on TikTok or Instagram or whatever you want to scroll within a few months. But for almost all traders, that's not the correct approach. Because you need data. For example, you need to know your win rate. You need to know which risk to reward needs to suit that win rate. You want to know what your biggest losing streak is over a big data set. You want to know your biggest winning streak. So for example, in this hypothetical scenario, you have a win rate of 40%. You're shooting 1 to 3s. Your biggest losing streak is 9. And you think, 9? Are you the worst trader? A 9 losing streak is possible. Even when you shoot your edge. And your biggest winning streak is 5. 5 winning streak, you can go to the back. That's crazy. Amazing. I love that. And this data, 40%, 1 to 3, 9 losing streak, 5 winning streak, is going to be your playing field. It provides feedback every single moment, indicating if you're still playing on the correct field. Okay, what does that mean? Determine your playing field. If you notice you're outside of your playing field, so that means in our example, having a bigger losing streak than 9, or your win rate is not 40, but it drops all the way to like 15%, it's time to start a feedback loop. Because then you know, okay, this was my data, this is how my trade should go. If I go outside my playing field, somewhere there, I'm like, hey, what do I need to do to come back in that baseline of your data? And the cool part is, if you're playing within your playing field, there's no need for insecurity, anger, being emotional when you have that inevitable losing streak. You know, it's simply part of your playing field. No panic. When you don't have data, remember the random approach, and you go in 5 losing streak, I'm sure you will blow all your accounts you will, and you think, my strategy doesn't work, and everything is going against me. The market is taking me out, right? How it works. You'll probably switch strategies, go on YouTube, buy a new course, get a new mentor. You know the drill. I did that when I started out trading as well, years ago, so I know how you feel. But you have a playing field based on your data, right? Only if you lose more than 9 times, then it's time to review and reflect. And so when you lose more than 9 times, let's say you have a losing streak of 50, then you can go to your journal. Like, hey, what went wrong? And most of the time, it's your first 4 or 5 trades, or your few trades, is just your edge hitting, and then you become more loose. Like you want to get that money back, you want to get a nice win in, and your coaching plays around. So then you have a perfect feedback loop. Now you know exactly where to focus on to improve. But the power of this playing field analogy is that there is no panic. You know exactly when you are still within your data, and you also know when you're stepping outside of your data and you need to actually improve something. So from today, choose your team. The team on the left has data on their trading. It says 2 times left. No, Team on the left has data on their trading. Team on the right does not. You see that when you want to play this game, you want to score. I think it's easier to play from this side when you just can shoot the ball and just goes. Because gravity goes to the other side. It's gonna be better. So on which side of the field do you rather play? I would say the one with data, but that's me. 6, lack of risk management. Removing your stop loss. Guys, there's one guarantee to not make it in trading. And that is trading without or removing your stop loss. You can be the best analyst in the world, but one single trade can wipe you out. We don't have stop loss. You can be wrong. All your success in trading is on the other side of your ego. Another brain tattoo. Not in the slides, remember it. You can be wrong. Even when there's the best setup you've ever seen, all the stars align. It's a probabilities game, guys. Even when the trade is 99 stacks towards you, you still can lose it. So take the loss, put your stop loss in place, and see what happens. This means when you don't have a stop loss or remove your stop loss, this is your guarantee to failure and losing everything you invest in trading. So make it a non-negotiable. You should incorporate it from day one. Remember, we are going over the 7 traits of losing traders. Things you should avoid to become successful. I think this is one of the easiest ones. So if you cannot even commit to putting a stop loss in place, go dropshipping. Do it. If you want to do it, if you want to be successful here, stop loss. Nothing will save you, and you will not become a profitable and professional trader. I don't want to sugarcoat this. Like, if you want to lose money, remove your stop loss. If you want to make money, keep your stop loss. That's it. Most bad risk management, and also that urge, like, oh, I need to move my stop loss to the like a little higher or lower, or I need to take profit already. That's their foundation in one single concept, and it's called cognitive dissonance. It's a mental disturbance people feel when they realize their commissions and actions are inconsistent or contradictory. And what does that mean? It's an urge from your brain to fix your emotional imbalance. And this is present with your trading both when you're winning or losing. And how does it look like? It's fixing that emotional imbalance. Let's say if you're winning, you're up, but then comes that cognitive dissonance, that emotional imbalance, that you might lose your paper profits. Oh no, I'm 1,000 in profit and my TP's at 2,000. I don't want to lose that $1,000. So you take off your trade way too early and miss out on that expected profit of 2K. That's cognitive dissonance in play when you are winning. Losing, same thing. You are down and you cannot stand the feeling of those red numbers, and the price can just consolidate in your drawdown. So without price hitting your stop loss, you already take the trade off way too early, while price still can go towards your profit point. Remember, you have a stop loss for a reason. That's the amount of points of money you are willing to lose on a certain trade. If you mess with taking off your trade in this scenario, you mess with your edge. Avoid it. If you notice you take your losing trades off so many times because you cannot stand this, then you have 2 choices. Or actually move that stop loss to the point you normally take your trades off either way. That's in a long scenario. Price goes down, you lose money. When price goes down and you take the trade off, let's say on 50% of your original stop loss level already. So let's say you have 1,000 risk on your trade, you take your trade off already at. That's not good, because when you press the button and put on your stop loss, you accepted the risk of 1,000. You just mess with your edge. If you want to fix this, well, you have 2 choices: or put your stop loss to that $500 risk mark, or reduce your lot size and do a bigger stop loss, because then the numbers are less when you're on the red. 2 choices. But again, cognitive dissonance. Be aware of that. And then the final one is the barrier of entry. Trading is hard. It can take multiple months to learn what you want to see in the chart. The time to learn trading is not paired to the specific trading language you learn. I think most people watching this are ICT traders, but like support resistance, supply and demand, everything works as long as you execute it consistently. It's all about changing your behavior and patterns based on the feedback you receive from the market. But make sure you focus on one of the trading languages. Like if you want to use indicators, Wyckoff, support resistance, go do it. That's completely fine. But focus on one and build data on that consistently. Don't strategy hop. Don't go from language to language. It is just not worth it. This means recording your trades, your thoughts, and your improvements. When you know The expectation management here. When you know, you need to spend at least multiple months on getting your foundation trading right. The barrier of entry is not hard, you just don't know the best way to climb it. If I would start over trading, well, I'll give you the framework right now. If I would start over in trading, this is how my first 6 months would look like. And it can be with a low budget or with a more better budget. So for example, if you already have a job or you have some savings, you can invest in your low budget is as follows. Your starting point. Find free courses. You can, of course, you found this one. Amazing. There's so many on YouTube as well. YouTube, whatever. Just find free trading course. You will find amazing ones. And of course, ICT Traders YouTube channel is full with amazing videos. It's a lot. That's why, of course, you find a mentor to help you. But it's all that goes free course that goes over different aspects of trading, not only charting. If you find a mentor or someone who teaches you who can only talk about technicals, big red flag, guys. Big red flag. Technicals is only 20 to 30% from whole trading. The rest is, I'm going to show you in a second, is the rest of the trader pyramid. In the first month, get to know the basics in trading, like candlesticks, market structure, trading view. This is all if you're new. In this school group, there is a section called Beginner Bootcamp. I will teach you in like 9 short, simple teachings, everything you need to know if you're a beginner. So if I would start over, I would watch the Beginner Bootcamp. Month 2, finding your entry model. That means what do you need to see happening in the chart before you press the buy or sell button. I will give you an entry model for free later. Month 3, building data on this entry model. So that means executing it on the charts in real time, but also backtesting it. So you're already 3 months in. You know the basics, you know how trading view works, you know a simple entry model. It doesn't need to be very complicated. Just X, Y, Z needs to happen, then I press the buy or sell button. Then month 3, you build data on that. What's your win rate, losing streak, win streak, which do board, like the data points. Month 4. Month 4 and 5 are boring. Why? You have your entry model, you know your data, you know your playing field. Now it's just time to sit, wait for your setup to appear, and execute consistently. You will find things you can improve in your model to increase your likelihood of more winners. So you're gonna refine and enhance your entry model over time. It's very boring. No shiny objects. It's very fucking boring. Month 6, you have your data from month 4 and 5, where you actually enhance your strategy multiple times. You have a refined strategy, a better strategy. Know based on data what you want to see in the charts before you press the button and what you can expect as an outcome of the result of it. So you know if I do X, Y, Z in the charts, I can expect this amount of trades to be winners, this amount of money I can make. It can be a range. And based on that, you can actually build your business. You can actually start scaling your trading accounts with or without leverage. And from month 6 and forward, it's just scaling. And then if you have a better budget, this is how my path looks like. I found a mentor. Find a mentor who's a few steps ahead of you. Like if you're starting around, you don't want a mentor who makes 100 million per month or per year or whatever, because there's too big of a gap. I had multiple mentors on my way where I'm in right now. So my first mentor was the one who was a few steps ahead of me, who learned me the basics, who learned me the framework I'm teaching you right now, and expect them to be around 500 to 2K. And of course, the mentors become more expensive the more experienced you become. But of course, it's very nice because you make more money, you can invest more, and you know you compound your. A mentor shows you where you need to focus on in this overwhelming stage of too much information. Like at the start, if you say on YouTube search beginner trader course, you will find 500 different courses, all 10 hours long. Every single one amazing in their own thing, but you don't have the context yet of which concept of this course can I pair on this one, and there's just too much information. There's where a mentor comes in who says, yo, focus on this and this, combine that, go to the chart. That's what my mentor did, and what I know other traders had the same experience. Month 1, exactly the same. Beginner bootcamp. Find some, I created one, but you can also find on YouTube, get to know the basic in trade. It's in the classroom section in the school group, and also on the YouTube channel. Month 2, ask your mentor what his entry model is, and use his one or her one as the foundation of your own entry model. So don't copy your mentor's model. That's a huge mistake. Why? It's not yours. You need your own entry model. What suits your personality, what you like to see in the chart. But if you already have like a foundation of a mentor or a trader you admire, you can use it as like a framework, as the basic. And see like, okay, what I see him doing in the charts, I like that, but I don't like that one. Maybe I can change X, Y, and Z. And you can make it your own and then build data on that. If your mentor's model works already, the only thing you need to do is tweaking it to your own trading style. And because you already have like a basic, like a foundation, it will save you a lot of time. Month 3, building data on this entry model, backtest and journal. And then month 4 and 5 is the boring part, but now you have a mentor. So you have data, execute on the data consistently. Because you have a mentor, you can sit down with your mentor and ask him or her what you can improve on your current trading model. So you go to your mentor, you say, hey, here's where my 3, or let's say 1 or 2 months of data look like. Executing here, very nice. I see that I am struggling with X, Y, and Z. What can I do best to fix this? Remember about the intentional improvement, about the rate of learning, the time between you making a mistake and you learning from it, change your behavior to not make the mistake again. Your mentor is going to be that shortcut. Your mentor will just say, hey, try this and this. This will help a lot. And probably it will, because your mentor had exactly the same struggle when he was in your shoes. And next to the guidance of your mentor, you will also find things you can improve in your model yourself to increase the likelihood of more winners. Month 6, following these steps, you probably already made a small amount of money. You can now reinvest that in more expensive mentors who can bring you from the beginner stage towards the more advanced stage. This is exactly what I did, guys. Of course, you pay more money for better mentors, but you have a foundation for your first mentor. You already made some money, or if you're not making money, also fine, but you create already an insane foundation. You need to then scale with a mentor on a higher level. There are multiple mentors who can do everything. They can teach you the basics, teach you more intermediate stuff, and just the advanced scaling stuff, because this is what I did. So I would recommend going for this route. If you don't have any budget right now to do it, go to the low budget route, and when you have money, make the shortcut for a mentor. I have a mantra, or a brain tattoo, is don't invest in courses, invest in mentors. I'm not going to explain this. Think about it. All right, cool. With both the low budget and the better budget, you're doing the one single most important thing. And that's building data, building your business. On top of this, when in the future, this may be like a little point on the horizon, like what do you want to do with trading? Do you want to sit in Dubai, sitting on jet ski all day? Fine. Some traders want to actually grow in the trading, and the end game for traders is a fund, is a hedge fund, or maybe a bigger fund or trust or whatever. If you want to work there, the first thing, if you want to trade for a multi-million-dollar hedge fund, the first thing they're going to ask for when you want to apply there is, yo, fine, I like the way you look, I like the way you talk, show me your data. If you don't have data, they'll say, okay, how do we know you are a good trader? And they say, yeah, I do this, I'm funded. No. You need data, actually hard data. So if you have the aspiration to trade with bigger money, not prop firm money, like tens, hundreds of millions of dollars, use that motivation to start journaling and building data. And the cool part is, if you build data from day one, or this is your day one, even if you're trading but you're not journaling, this is your day one, you journal right now, you can show your actually improvement over time. Start as early as possible to get the fastest result. Boom! You now know the 7 traits of unsuccessful trader. And I think that's the reason for a nice little confetti there. You know now what to avoid. But now you need to know where to focus on. But what is the actual framework you need to follow to become successful? What to do? I created a framework that teaches exactly this, and that's called the trader pyramid. And this is what it looks like. It's a pyramid, and your foundation is here. And on the foundation, you build different layers. First one is your psychology, your mental game. On top of that, there needs to be a trade plan. On top of that, you need to build data on the trade plan. And only on the top, there is your technicals. Remember earlier when I mentioned that technicals, like the cool trading courses where you need to watch this and this, there's only like 20 or 30% from what trader. Actual professional trading is more about layer 4, 3, and 2. Journaling, trade plan, psychology. Because you can trade support and resistance, you can play supply and demand, you can trade Wyckoff or whatever indicator you want. If the foundation of the layers below that are not good or non-existent, I know many traders who come to me and I ask, show me your data. They don't have data. So they're actually having a trader pyramid which misses a full layer or don't have a trade plan. And they're like, oh, well, all my trading is not profitable. Right? 4 layers. Let's go over them one by one. First one, psychology. This is the bottom, foundational layer. It's your mental game. And this consists of like all that stuff that you're struggling with mentally. Remember your reptile brain and your limbic system, FOMO, overtrading, revenge trading, self-doubt, overconfidence, fear, greed, discipline, patience, losing, resilience. Trading psychology is one of the most interesting things there is, because trading is goes against everything you want in your brain. It gives you lots of cognitive dissonance, your emotional imbalance. And I think most of you here are like the adrenaline, the rush. So that's gonna be the biggest focus point, and it's amazing. The only way you can fix this is having strategies and routines in place to deal with them. In the next teaching, when we go over the first layer, the psychology layer, I'll go more in depth on this. Then on top of that layer, psychology layer, we have the trade plan layer. What do you need to have in your trade plan? You need to have your goals. You know what markets to trade, which pairs. Do you trade gold, Bitcoin? Do you trade options, stock, Forex, whatever. Market selection. You need to have a strategy. What do you want to see in the chart? You need to have risk management in place. And also you need to have a trading schedule. Then on top of that, so psychology, trade plan, journaling, building data. You need to build data on your trading ASAP. And you can do it in two ways. Looking at past performance, backtesting, looking at price in real time, and journal that. Tools to use for backtesting can be TradingView or a TradingView with a replay button, or FX replay. You can use for journaling, you can use Edgewonk, you can use Notion, whatever you prefer. Just do it. And on top of the trader pyramid, the smallest portion actually is the technicals. What do you want to see the charts before you press the button? It does not matter with trading which language you speak. Doesn't matter. Just choose one and stick to it for at least 6 months while you're building your data. It's what support and resistance looks like. It's what supply and demand looks like. It's what ICT looks like. I trade ICT, and in the specific teaching on technicals, we're going to dive deeper into it. I want to congratulate you. Amazing. You stuck to the end. You took notes. Hopefully, you learned something. There are some paradigm shifts maybe you already had, but this is the foundation you need. You now know the 7 traits of unsuccessful trading. You know how the trading pyramid looks like, and in the next teachings, we are going over every single layer in detail. So at the end of this market mastery course, you have every single foundation you need to make money with trading. Congratulations, and thanks for watching. I'll see you in the next